The serious economic consequences of the oil price crisis. Shocking the entire world last week, West Texas Intermediate (WTI) plummeted to levels never seen before in history. It was trading negative. What does negative crude oil prices mean? What negative economic impacts will negative oil bring? In this video report, we discuss the serious economic consequences of the oil price crisis. On April 20th this year, at the beginning of the day, WTI had started trading at around the US $18. But as the day passed, the crash reached the US $37.63. In negative, something that happened without precedent. This crash begins mainly due to a technical situation in the oil industry. Add the stipulated contracts that were about to expire and you have the perfect formula for red numbers. What events occurred leading to the crash? In a few words, global oil demand has fallen sharply in recent weeks as a result of the confinements and quarantines by the coronavirus, and the oil supply power struggle between Russia and Saudi Arabia. Consequently, oil companies have resorted to renting tankers to store surplus supplies, and that has pushed the price of WTI crude oil to negative values. The situation occurs due to excess supply in the market and difficulties in storing high surpluses. It is caused by the sharp drop in demand due to the paralysis of the coronavirus crisis. All this leads to the conclusion that this confinement in each country has impacted oil trade in an abrupt way. In a BBC report, Morgan Stanley analyst Devon McDermott mentions that oil prices failed to keep pace with growing lockdown measures and reports that this drove global demand down 20%, potentially pushing the world to run out of storage capacity. The oil war between Russia and Saudi Arabia. Earlier this year, a price war broke out between Saudi Arabia and Russia. It started when Saudi Arabia failed to convince Russia to back production cuts that had been agreed with the other OPEC members. This is not the first time Saudi Arabia has used its market power to bully other nations to fall into line. However, unlike other times, this price war came in the heels of China announcing that a novel coronavirus has been discovered and that it is highly contagious. At that point, Moscow and Riyadh had no choice but to engage in a game of brinksmanship. And the only apparent strategy was to wait for the rival's economy to be irreparably affected before theirs. Ravi Krishnaswamy told CNBC, oil prices have fallen more than 60% since the beginning of 2020 amid the coronavirus crisis and a price war led by Riyadh and Moscow. Prices could continue to fall as producers flood the market with increased production levels that are likely to last until June at least. Global demand plummet due to COVID-19. As we have mentioned, oil prices have fallen more than half in the past month as companies cut or closed production because of the coronavirus. In addition to falling demand, there was a price war between Saudi Arabia and Russia, which contributed to the current crisis. The combination of those two leads to a projection on a lower global oil demand before the price crashed. According to the International Energy Association (IEA), 2020 will see a record drop by 9.3 million barrels per day year-on-year. Moreover, by the time of the crash, demand was already estimated to fall by 29 million barrels per day compared to the same time in 2019. And while the numbers for the end of the year look better, the effects of COVID-19 will last beyond the short crash based on current analysis. Why couldn't oil producers just shut off the pump? Long story short, producers cannot just flip the switch and turn off the pump. There is a lag between reducing or shutting off production and the actual stoppage. Therefore, it is impossible to reduce it at the same speed as supply meets demands. That makes oil supply a fairly inelastic supply. Lockdown measures put in place to contain the spread of COVID-19 represent an unprecedented shock to global oil demand. Global storage capacity is reaching its limits. And even after the announced truce between Russia and Saudi Arabia, the free space is expected to be filled by June, which puts even more pressure of global prices. Sadly for producers, low prices will not increase anytime soon. Even if economies are opening up, oil consumption will not meet supply anytime soon. Consequences for oil companies and suppliers. The low prices placed a lot of pressure on mid- and low-size oil producers. The drop in prices has been so substantial that it makes it impossible for most US-based and Canada-based companies to turn a profit. Artem Abramov, head of shale research at Rystad Energy, presented a report on how much the US oil market will be affected by the drop. He also presented his research on CNN and explained that over 1,100 companies could file for bankruptcy in the US alone. In Abramov's words, companies have been taking too much debt during the good times and now will have too much debt to handle during this time. Shale oil will collapse. The shale, in general terms, has a high cost of $50 to $60 per barrel. For comparison, the cost of fuel in Russia and Saudi Arabia is $10 to $15. Retail processed oil prices have fallen more than 30% so far this year. Perhaps the worst is yet to come. In a market where the coronavirus weighs down demand. For producers, any barrel withdrawn from the market represents a decrease in income. Environment for wars to start. The tension from the economic crisis and the risk of COVID-19 is not the only thing to keep in mind. United States President Donald Trump issued orders for his army to attack Iranian ships that dangerously approach U.S. ships in the Persian Gulf. The Pentagon had reported that 11 vessels of the Revolutionary Guard, the Iranian military, were too close to U.S. warships in the Gulf. The U.S. Armed Forces described these movements as dangerous. According to the U.S. Navy, in one of these incidents, an Iranian gunboat crossed about 10 meters from a U.S. ship at very high speed. The Revolutionary Guard admitted that there was a meeting, but blamed the Americans. The fear now is that hostile maneuvers and war of words will give way to other actions. This episode, however, shows that despite the pandemic, pre-existing international tensions have not disappeared. As we come to the end of this report, we would like to ask, would you think that there will be a reoccurrence of another oil price crash? Will the oil supply chain deteriorate as the oil price stay low? Please share your thoughts in the comment section below. Hope you have enjoyed this report video. Please give it a like while you share it. Thank you, stay home and stay safe.